Greetings of the day, friends. I'm Omkar Singh and welcome to our channel Mindscraft. Friends, today we are going to introduce you with grade 12 syllabus. We are going to start with accounting. Okay, so here is the first topic, accounting for partnership firm fundamentals. In grade 11, you must have understood that there are different forms of business organizations. Sole proprietorship, in which there is one owner, he is only financing, he is only the manager, he's only the controller. Everything that is managed by him only. He is controlling all the affairs, everything is looking after. All the risk he is going to undertake, he is going to bear all the uncertainties, he is going to enjoy all the profits, or he is going to bear all the losses. Everything would be taken care by him. Now, what happens in sole proprietorship? The one man's capital, skill, controlling, risk taking capacity are generally limited. So that's why he may find, or some persons may combine and enter into an agreement to form a partnership. So basically, partnership, which is our topic, it's a relation of mutual trust and faith. In order to maintain this trust, it is necessary that partnership accounts be maintained in an honest, accurate, and equitable manner. Partnership accounts should present a true and fair picture of the partnership business. For this purpose, it is necessary to study the definition of partnership as given in the Partnership Act and the relevant provisions of the Partnership Act which affect the partnership accounts. Now, if we see the nature of partnership firm, so as per accounting point of view, partnership firm is treated as a separate business entity distinct from its partner. However, as per legal point of view, a partnership firm is not a separate legal entity. In other words, it has no existence separate from its partner. It means that in case of bankruptcy of the partnership firm, private estates of the partners would be liable to meet the firm's debts. So now let's understand first what partnership is. And according to the section 4 of the Indian Partnership Act 1932, partnership can be defined as a relation between persons who have agreed to share the profits of a business carried on by all, or any of them acting for all. Now, what do you mean by this? Basically, there may be minimum 2 partners, maximum 50 according to Partnership Act 1932, Indian Partnership Act 1932. Now, here this statement means either the business can be maintained or it can be run by all, or there can be one person who will be acting for all. Okay, so this is what it is: an association of persons, 2 or more persons coming together, and they do undertake a lawful business which is enforceable by law, which should not be anti law activity. Okay, it should be a lawful business basically, and whatever the profits and losses it would be shared in a desired manner. Basically, it can be equally shared, or it can be shared in a desired manner. So this is what partnership basically firm is. Partnership firm are called as partners, and collectively the enterprise formed by them is called as partnership firm. Okay, now partnership firm has no existence separate from its partners legally. From the accounting point of view, the owners and the firm are separate. It is regulated by Indian Partnership Act 1932, which affects the partnership accounts. Like, there is no act regulating for sole proprietorship. There is act regulating for Hindu undivided family business, that is Hindu Succession Act 1956. There is act regulating for cooperative societies, that is Indian Cooperatives Act 1912. And for joint stock companies, there is Indian Companies Act 2013 now. So likewise, partnership is also affected by Indian Partnership Act. It is regulated by Indian Partnership Act 1932. And partnership is a result of an agreement, oral or written, but the return agreement which contains all the terms and conditions decided among the partners about many things, the basic things about the partnership, how they're going to conduct the business and everything about the minor details of the partnership, that is called as partnership deed. Okay, so now we will talk about the features of partnership form. Now when we see the features of partnership, we need to understand that like they are two or more persons. They are two or more persons. Like there must be at least two persons to form a partnership. Partnership Act does not specify the maximum number of persons, but Section 464 of the Indian Companies Act 2013 restrict the number of partners to 50. Okay, so number of partners which should be there, maximum should be 50. Now any partnership is basically it is supported by agreement. Okay, it is agreement is the base of partnership. Partnership is the result of an agreement. Now it must come into existence by an agreement and not by the operation of law. Now when we say that, like, means such an agreement can be either oral or in written. The agreement forms the basis of mutual rights and duties of partners. Now, existence of business and profit motive. Now what do you mean by this? That partnership can be formed for the purpose of carrying on some business with the intention of earning profits, and such business must be legal. A joint ownership of some property by itself cannot be called a partnership. Okay, so basically there should be some business. It should not be a one-time sale, okay, that you are doing a transaction and you're saying that this is partnership. No, it should be continuous. Okay, it is a continuous activity. Okay, so basically there should be profit motive. It should not be a charitable dispensary or any charitable work. That cannot be termed as partnership. So there should be some business existing, or there should be some profit motive should be there, which is the base for partnership. Then sharing of profits. The agreement between the partners must be aimed at sharing the profits of the business. If some persons join hands to run some charitable activity, it will not be called partnership. Further, if a partner is deprived of his right to share the profits of the business, he cannot be called a partner. But it is not necessary that all partners should share the losses also. It may be agreed that between the partners that one or more of them shall not be liable for the losses. So basically there is some profits happening and the profits would be shared in a particular ratio. It can be equal or it would be a specified share. Like there are two partners, the ratio can be either 1:1 or 3:2 or 2:1, 5:4, like that. Okay, if there are three partners, the ratio can be either 1:1:1, or they can be 3:2:1, or it can be 2:2:1, like that. 2:1 or 2:1:1, like, means what is this actually? That if in a firm the firm is earning 4 rupees and the ratio is 2:1:1, means the first partner is taking 2 rupees, the second partner is taking 1 rupee out of it, and the third partner is taking 1 rupee out of 4 rupees. So this is how the profit is divided in a particular ratio. The relationship of principal and agent. Each partner is an agent as well as a partner of the firm. An agent because he can bind the other partners by his acts, and a principal because he himself can be bound by the acts of the other partners. Every partner would be principal for the other partner, because whatever he can direct, the other partners have to accept it if it is good for the firm. And the similar partner, being a principal, would also be an agent for the outsiders. Okay, like for the outsiders, each partner would be an agent, and for the partners, the one partner would be principal. So every partner would be acting as an principal and as an agent at the same time. So this is very important feature of partnership. Then the next and the last feature of partnership is it is carried on by all or any of them acting for all. It means that each partner can participate in the conduct of business and each partner is bound by the acts of other partners in respect to the business of the firm. So basically I told you in the meaning itself that either the business is conducted by all or any one of them is conducting for all. Okay, like suppose there are three persons in a partnership firm, they have contributed capital. So either they all are conducting the business, either they are all active partners or one of them or two of them are active partners and they are acting for all the three partners. This is what it means. It is carried by all the partners, okay, or any of them acting for all. So this is what like we can say that partnership cannot come into existence in the absence of any of the above mentioned essential features. So these were the features of partnership. Okay, now understand that every partner have got some rights. Of course, when the partner is contributing capital, okay, when he is devoting time, he should be given some rights which is very mandatory and every partner should have that right. Now let's understand one by one what are these rights. Every partner has the right to share profits or losses with other partners in the agreed ratio that I told that if there is a particular ratio in which the profits or losses would be shared. Okay, then every partner has a right to take part in the conduct of the business. Yes, of course, when you're contributing towards the capital, when you're devoting time, you should be having that right that you can give your vote, you can give your opinion and you can take part in the conduct of the business. You can give your suggestions, you can give your opinions that yes, how the business would be conducted. Then every partner has a right to be consulted in the matters related to partnership business. Is very important. He would be he can consult others, okay, other partners, that yes, what can be done, what is right, what is wrong. So basically every partner can be consulted, okay, has a right to be consulted in the matters relating to the partnership business. Then the fourth, we can say like every partner has to respect, has the right to inspect, has the right to check the books of accounts, that what is going on, how's the financial position, okay, is our assets going more increasing or our liabilities are increasing, is our profitability increasing or we are going to losses. He can check the books of accounts, he can inspect the books of accounts, and he can also have a copy of the books of accounts. And apart from this, there are more features like the partner can, he should be having a right to disallow the partner admission of a new partner. If any outsider is interested to join in the business, he can tell or he can give his opinion that yes, we are not going to allow anyone into the partnership firm. Every partner is a joint owner of the partnership property. Of course, very important that every partner is the joint owner of the partnership property, because collectively they have contributed in the capital and they can buy the property together. So they are the owner of the personal partnership property. They are the co-owners. So every partner have got that right to get the ownership, joint ownership of the partnership property. And if any partner, like sometimes it happens that in addition to the capital, there may be more funds that can be required with the firm. So if any partner, apart from his capital or his or her capital, if someone is contributing or if someone is lending some money, lending some amount, giving some advance to the firm, then he shall have the right to receive interest on it, and the rate of interest is also specified. It may be specified in the partnership deed, then according to it would be given that interest on loan would be given at that particular rate, or if it is not specified, it should be 6% per annum. The interest on partner's loan should be given at 6% per annum. This is very important thing that to be taken care, because many times it is asked in the question as well. Then like the partner have given loan to the firm and there is no rate of interest on loan is given in the sum. So always remember that if partner have lent any amount to the firm, the rate of interest is 6% per annum that would be given on his partner's loan. So if a partner incurs any expense or makes payment on behalf of the firm, he has the right to be indemnified by the firm. So he should be reimbursed by the other partners. And every partner has the right to retire from the firm after giving a proper notice. Minimum 15 days, 1 month, whatever it is written according to the clauses of the partnership deed. Because partnership deed also gives the idea that if any partner is getting retired, how many days before he should he should tell that yes, I'm going to retire. So according to that, they will be getting ready with all the funds that has to be paid to the retiring partner. So this way all we have discussed today, that about what is partnership, okay, and what are the features of partnership firm, okay, and then we also have discussed that basically what are the rights of the partners. Now let's understand that what is partnership deed. Okay, what is partnership deed? Because I told you that this partnership is the result of agreement. So since partnership is the outcome of an agreement, it is very important that there should be some terms and conditions that should be agreed upon by all the partners, and such terms and condition may be oral or written. But law does not make it compulsory to have a written agreement, but it is advisable that to have a written agreement, because it avoids all type of misunderstandings, disputes between the partners. So it is very best option to have a written agreement. Okay, it should be duly signed or registered under the Act, Indian Partnership Act 1932, and such an agreement is called partnership deed. Now this is also called as articles of partnership. Like there is articles of association in companies, so there is articles of partnership also. Okay, so these partnership deed, what all it includes? This includes very basic details like the name and address of the firm, name and address of the partners, the type and nature of the business the firm proposes to do, amount of capital to be contributed by each partner, and whether this capital accounts will be fixed or fluctuating. Interest on capital, whether it would be given on the partner's capital or not. Okay, drawings, how much amount is permissible that the partner can withdraw for his personal use. Then profit sharing ratio, what should be the profit sharing ratio? It should be equal or something else. Okay, then salary, if it would be given to the partner or not, to the working partner. Goodwill, that there are different types of valuation of goodwill, which method to be adopted: average profit method, super profit method, capitalization method. So which method to be adopted? Accounting period, yes, normally we do adopt 1st April to 31st March as the accounting year. Okay, so even like that is taken care, or it is given in the law that 1st April to 31st March, or if partners are willing to take any other year, any other duration as the accounting year, they can do so, but they need to write it in the partnership deed. Method of recording firm's accounts, okay, like whatever the documents or the safe custody of the books or the other documents about this, all this has to be written in the partnership deed. Auditing, okay, will the firm's book be audited or not? Okay, who would be the auditor? What is the mode of auditor's appointment? When the partnership was commenced? What is the duration of partnership? Okay, use of we can say bank accounts. Who will be operating the bank account, and which name the bank account it would be? Then any clause for admission of a partner, or while retiring, while the partner is getting retired, how many days in advance he need to tell us that he's going to retire, and what would be the procedure in case if there is a dispute between the partners or with the third party also. So this is all about that partnership deed includes. So this was the contents of partnership deed, and very important to have a partnership deed because it regulates the rights, duties and liabilities of each partner. It helps to avoid any misunderstanding amongst the partners, because all the terms and conditions of partnership have been laid down beforehand in the deed, and any dispute amongst the partner may be settled easily as the partnership deed may be readily referred to. So hence it is always the best course to have a written partnership deed duly signed by all the partners and registered under the act. So this was all about partnership today. Okay. I hope you have understood all basics about the partnership. Now basically we need to understand that there are some rules that are applicable in the absence of partnership deed. That if partnership deed is not there, then what would be the rules? What about the profit sharing ratio? So profit sharing ratio should be equal. Okay, no matter what is their capital contribution, but the profit or losses are to be shared equally in the absence of such partnership deed. Interest on capital should not be allowed to the partners if there is no partnership deed. Then interest on drawings will not be charged. There cannot be no salary that could be payable to the partner, but the interest on loan would be paid at 6% per annum to the partner who is lending some loan to the firm. No partner can be admitted without the consent of all the existing partners, but every partner, if the partnership deed is not there, but still each partner can participate in the conduct of the business. Each partner can inspect the books of the firm and can take the form or take a copy of the same. So it should be remembered always that the partners may change any of the provision by coming to a common agreement. Agreement is whole and soul of the partnership firm. So this was all about partnership. That what are the features of partnership, what is partnership deed, what all it includes. If partnership deed is not there, what are the rules applicable, what are the rights of the duties. This all things we have discussed today. So I hope everything that we have discussed today is clear to you. If any questions is there, you can write in the comment section. We appreciate each and every question of yours. Okay, every suggestion of yours. So if any suggestion is there, you can write in the comment section. You can like, share the video, and you can subscribe to our channel. You can press the bell icon for further updates. With this, we will wind up today's session, and we will meet in the next video, next session, in which we will be discussing about the recording of partnership transactions. So stay connected, stay updated. Thank you very much.